Have you ever glanced at a candlestick chart and felt like it was speaking in some secret code? Those quirky little stick figures seem so cryptic, don't they? Well, let's peel back that layer together and decode what those candlesticks are truly telling us about market action. And here's the surprising part. Each of those stick figures is actually a visual diary entry written by the market itself. Every day, or even every hour, these entries tell a story about how buyers and sellers interacted with whatever asset we're tracking, like stocks, cryptocurrencies, or commodities. So, let's take a closer look at one of these entries. A candlestick isn't just any old drawing. It's a snapshot of the battle between buyers and sellers. Now, imagine you're standing outside a store during a big sale. On one side, you have eager customers, buyers, and on the other, shopkeepers trying to keep their prices high, sellers. The result? Prices go up or down based on whose side is winning. In our candlestick chart, the little stick figure is like these salespeople. If it's a long white or green stick, that means buyers were in charge. They pushed the price higher during that period. Conversely, if it's a short red or black stick, sellers had the upper hand and pulled prices down. And here's another neat trick. Those little lines on top and bottom of the stick, they show us the highest and lowest prices reached during that time frame. It's like marking the high and low points of our sale, where everyone was willing to buy or sell at their best price. Now, you might wonder why these charts are called candlesticks. If we were in an old-fashioned candlelit market, this chart would look a bit like how candles form on a holder each day. But don't worry about the historical name. Just think of them as little market diaries capturing who won that day's battle for prices. Okay, let's jump right into our mystery of candlesticks. You've probably seen those little bars popping up on your trading screen, but do you know what they're really saying? Imagine each candle is a tiny stick figure standing there, and the story it tells about that day's price action unfolds in just a few simple steps. First up, we have the body of a candle. Think of this as the stick figure's torso. If you imagine our stick figure is happy, standing tall and strong, this means the closing price was higher than the opening price. In other words, it's a bullish day for our imaginary trader. But if the stick figure leans over or even falls flat on its face, that means the closing price was lower than the opening price. This is what we call bearish. Now let's look at those little lines sticking out. These are called wicks. They tell us how far our stick figure moved around during the day. If you picture a stick figure with long arms reaching up and down, that shows the highest and lowest prices of the day. So, if there's a long upper wick, it means the price shot up at some point, but ended back below where it started. Similarly, a long lower wick indicates the price dropped during the day, but finished higher. And here's the surprising part that most people don't know. These wicks aren't just about highs and lows. They can tell you more about market momentum. A small body with big wicks suggests a day of volatility. Our stick figure was dancing around a lot. This isn't necessarily good or bad, but it does indicate a lot of activity. So, if we put this all together, our stick figure can tell us a lot about what happened during the trading session. A happy, upright stick figure with a short body and small wicks might mean steady gains. An unhappy, lying down figure with long wicks could indicate a bumpy day with lots of ups and downs. When you start to see these stick figures over time, they form patterns that can be quite revealing. You might notice clusters of happy stick figures followed by one or two sad ones, indicating a trend. Maybe the market is going up overall. And here's the surprising part. When you see a green candle, it's like a happy soldier standing tall. It means that at the end of the trading day, the closing price was higher than where it started. Basically, traders made more money that day. Let's break it down with our stick figure story. Imagine you have a little soldier on a stick. This stick is our candle. On a regular day, this stick stands tall and proud. That's what we call a green or bullish candle. It tells us that the closing price, where the soldier ends up, was higher than where it started in the morning. So, if you see a green candle, think of happy traders who made money that day. They won the battle against those who sold short, and the market closed with gains. In real life, this can mean they bought stocks or Bitcoin at a lower price early in the day and sold them for more by the end. Now, here's why people might get it wrong. Often, green candles are seen as just an indicator of profit. But remember, every candle is a snapshot of that trading session. A single green candle doesn't mean the market will keep going up. It just tells us what happened in one day. So next time you see a green candle, Just smile and think of our happy stick soldier standing tall. It's a sign of victory for those who traded in favor of the closing price that day. All right, let's dive into what a red candle actually shows in our chart. You see, while the green candles represent a bullish victory, where prices closed higher than they started, the red candles are like a bear growling. They signal a downturn in the market. Imagine you're playing a game where you move a toy car along a track. If the car moves forward and ends up at the end of the track, that's like a green candle showing a price increase. But if the car starts at the end and moves backward to its starting point, that's a red candle indicating a price decrease. And here's the surprising part. The size of the red candle tells us about the strength of this bearish move. A larger red candle means there was more selling pressure, like a stronger growl from the bear. This could be due to various factors. Perhaps some big investors decided to unload their shares, or new information came out that made people less confident. Now, let's break it down further. When you see a red candle, it's not just about the end point. It's also about how the price moved during the day. The wick, that thin line on top and bottom of the candle, shows the highest and lowest prices reached during that period. If the wick is long on a red candle, it means the market had a lot of volatility. That is, there were big fluctuations in price before settling lower. So remember, every time you see a red candle, think of it as a bear taking a deep breath and getting ready to growl again. This signal isn't just about today. It's part of the ongoing story of supply and demand. The more we understand these signals, the better prepared we are to interpret market movements. And here's the surprising part. The size of the candle and its wick's shadows give us even more clues about what's happening in the market. Let's dive into this a bit further. First, think of the candle as a slice of the day. The body of the candle represents the opening and closing prices during that time frame. If you've ever eaten a sandwich, imagine it's just like cutting through one. A thick candle means the price moved significantly during the period, like a big bite taken out of your sandwich. This tells us there was a large gap between where the market opened and closed. Now for those wicks, shadows. These are the little lines sticking out on top or bottom, showing the highest and lowest prices of that day. Imagine you're playing dodgeball and you have to run from one end of the field to the other. If your shadow is very long, it means people were really eager to buy at the low point or sell at the high point, like if you had to zigzag to avoid all the balls. Long wicks can be a sign that there was intense buying pressure near the close or selling pressure near the open. For example, if you see a candle with a very long lower shadow, it means buyers were pushing prices up, but sellers came in at the last minute and dragged them back down just before closing time. This is like seeing a tall person standing next to a shorter one. They're both there, but their relative heights tell us something about who was winning that day. In short, candle size tells us how much the price moved, and wick length gives us insight into where the biggest buying or selling happened during the session. By combining these pieces of information, we can get a clearer picture of what traders were doing on any given day. So there you have it. Candlesticks are like market weather reports. Simple, but powerful tools to understand where the market has been and might be headed. These little bars aren't just pretty pictures. They tell a story that can help you make sense of market movements. Let's break it down one more time. Each candlestick shows us two important pieces of information: the opening price at the start of the period, the closing price at the end, and the high and low prices during that period. The body of the candle tells us if the day was positive or negative, while the shadows give us a peek into the true highs and lows. Now, imagine you're checking your weather app. You see a big fat red circle with a little white dot in it. That's like a bearish candle. Prices went down, but there were still some moments when prices try to go up, the shadow. And if you see a green candle with long, thin lines at the top and bottom, that's a bullish one. Prices closed higher than they opened, even though they flirted with lower levels. This kind of detail isn't just for fun. It can help you make informed decisions. For instance, if you see a lot of bearish candles clustered together, it might signal an overall downward trend. Or if there's a long upper shadow despite the closing price being lower, it could indicate selling pressure at higher levels. And here's the surprising part. Understanding candlesticks isn't just for pro traders. Anyone can use them to get a sense of market sentiment and momentum. They're like a cheat sheet in your trading playbook, showing you where the market has been strong or weak and giving you hints about what might happen next. So now that you know how to read these little bars like a pro, wouldn't it be great to have more tools under your belt? Subscribe to Market Decoded for more market magic, because understanding the markets makes all the difference in the world. And who knows, maybe you'll never look at candlesticks or planes for the same old way again.